All right, everyone, let's begin here. Please let me know if you can hear me. And we're going to look at some charts, look at some trading methods, answer your questions. Before we begin, just want to make sure everyone is aware. Just take a second here to go over the required disclaimer about day trading, whether it be Forex or options or stocks. Whatever type of trading you do, please don't risk any funds you can't afford to lose. Talk to a broker, ask questions. You can lose all your money and you can make a lot of money as well. But we have to understand that there is risks with trading. So please be very careful when you do decide to trade and practice. It's much better to get educated, practice with a simulated environment, and make all the mistakes before you go live. And that way, at least, you're not jumping into something you don't understand. All right, so to begin here, DayTradeToWin, if you're not aware of DayTradeToWin or if you're new to trading, offers primarily day trading methods, whether it be the scalping method, the Trade Scalper, which I'll show you, or the at the open to, or the Atlas line. Really what we like to do, what I like to do, is explain to you why and how trading price action is much better than trading and following software. So even though with these programs you do get software, I also go a step beyond that and teach you why you're entering, what's the target, what's the stop, not just following a trading room, for example, or not just following software and not realizing why you're entering it just because the software says so, but there has to be a reason behind that. So I really focus on, first of all, teaching the method and then adding the software so it does it for me automatically. And we still have to manage the trade. So don't walk away and let the trade hit your stop or hit your target. If you've seen any of the videos that I have out there, I'm big on trade management. And trade management is not just a stop with a specific stop. Trade management is knowing when to get out if the market's going against you, knowing if it's overbought, oversold, realizing that the market's too fast or too slow to trade. All those things are very important. So let me bring up a chart here. And by the way, if you haven't done so already, you can go ahead and visit the simulator page and we can help you get set up with a trading simulator. That way you can learn the charts, practice, really get to know the markets that you want to trade before going a step further and contacting a broker. You can actually practice for free. We have a videos page here with not just the trading videos, but also with testimonials, probably 200 or 300 videos here on this page. And then there's also the blog. The blog is important because whenever there's trading holidays or there's things happening in the market, I always put out a little something to help you with that. All right, so to begin here, let me bring this out of the way. We have a 5-minute chart, and on a 5-minute chart, I'm looking at primarily the ATO, the at the open to, and the Atlas line. Not just that, but there's also other methods that I look at. So we'll take a look at the 5-minute chart. Primarily, the bigger money is made on the 5-minute chart. Not really bigger money, but the larger profit, I should say, is made on the 5-minute chart. And remember, I always look at the ATR with a setting of 4 to tell me the conditions we're in. So currently, right here, right now, you're looking at about 7 ticks, the current conditions. And if I change, let's say, to a 1-minute chart, let me just bring up another chart here. This happens to be a 1-minute chart. Now I have the Trade Scalper here on the 1-minute chart. And a lot of people ask me, can you show the signals live? I want to see, what's really happening with the methods that you teach and that you offer. The Trade Scalper, believe it or not, is a method that only takes into account 2 to 3 ticks at a time. I don't want you to trade 24 hours a day. It's actually not my goal as a trader. I want to take the best trades. I want to take a look at the opportunities that exist, which means if you're trading on the last 10 or 15 minutes of the day, it's not the right thing to do because there's usually a squeeze on day traders towards the end of the day. The margin has to be increased overnight, which means a lot of traders are forced out of the market overnight. So this is not something that you want to do 24 hours a day. Overnight or after hours, a lot of markets are slower. So does that mean the opportunities are better? Obviously not. The market is slower. You have more chop, you have more whipsaw. It's really not worth trading under slower conditions. So when I look at scalping or any type of trading, it's important to choose the best and optimal times to trade. So what does that mean? It means not to trade when there's a news event, not to trade when the market's too slow, not to trade when the market's too volatile and active. Now, if there's things that are outside of our control, there's nothing we can do about it. If there's an earthquake or something else happens in the world geopolitically, there's nothing we can do about that. But we do have calendars, economic calendars, that tell us there's a news event at 8:30 or 10 o'clock or the FOMC. Those are times where you want to be very careful and either stay out of the market or realize that there may be an impact which will hurt what you're doing or trying to accomplish. So one of the free tools or indicators that I provide is the news indicator. And if I can show that to you, you can download it for free at daytradetowin.com under free indicators. And here are the DayTradeToWin indicators, ABC, Atlas Line, ATO. But one of them here, the news, allows me to look at a variety of news events. My focus is the high priority because that's really when the news moves or when the market moves. You can take a look at international, that's fine. So I'm going to add here the news. And the news is telling me that today we have consumer confidence at 10 o'clock, and then we have a Canadian, New Zealand. The Canadian and New Zealand news is not really that important to me. It's more the consumer confidence. So at 10 o'clock Eastern Standard today, just be aware that there could be an impact on the market. So you can download this for free, or really any news calendar, online calendar will work for you, just as long as you're not just trading without understanding that this does move the market. Now, we look at the Trade Scalper here. You may ask yourself, okay, so I see the market's going up and down. So what do I do with this? Well, what you're seeing is a demo version of the Trade Scalper. The original software actually is much more intuitive. It provides more filters and more lines. All this is showing me for the purpose of the webinar are the signals. So all I'm showing you are just the signals. The Trade Scalper offers two setups. The setups are either what I call a two-wick model or just a plain short or long type of breakout. So when I take a look here at the market giving me a short signal or this double wick signal, there's a reason for it. Markets really prefer to trade in areas where they've been, so they get contained. You can call that support resistance. You can call that an area where traders are comfortable. But as soon as the market goes into an unknown area and it's moving at the highest highs or lowest lows, we don't really know if it's going to break through that. And so the Trade Scalper looks for a type of breakout to get you through that. Not only that, I also think that markets love to test where they've been. So instead of really throwing yourself into the unknown, I'm a big believer in first taking this in a few steps. Step one is the market moving up or down. Do I see a breakout? Do I understand why? Step two is, now that I know the market's breaking out or in a trend up or down, let me try to get a better price. So I'm looking always for a better price. So as a quick example, do you see here how the market traded to this low? Well, it would be much better to trade into that area as opposed to, if the market breaks down, just assuming and expecting that it's going to break through and continue through. So these little things, when you refer to price action, I don't have any magical indicators here on the chart. You don't see any MACDs, channels, Keltner, Bollinger, stochastics. All that stuff may have a place, and the problem with that is everything is optimized nowadays. So I can optimize something with very specific values that look great, but as you go further into the room and you look forward without any type of optimization, it usually doesn't work. All right. Now, when I see the market giving me a signal, are you going to take 2 ticks? Are you going to take 3 ticks? What's your stop? How long are you going to hold on to the trade? Again, trade management is very important. The one problem that I see with traders, and hopefully if you've seen any of my videos, you're able to look beyond this, is that you have to understand the market conditions, slow, fast, expectations. The other problem that I see is specific stops are always being used, whether it be 1 point, 2 points, 5 points. So we as traders, I believe, have to be adaptive. We have to adapt. So you can see here that I have the ATR, which is telling me roughly 3 ticks. So when I look here, let me just put this like this. When I look at this here, there's an expectation that I don't have to have a very large stop. There's an expectation that I don't have to have a very large profit because the market at this area, this value, is not going to provide that to me. The same thing if I add here the ATR to the Trade Scalper method. What's my target? What's my stop? What's my expectation? So you can see that having a stop that is, let's say, 3 or 4 points is unnecessary. It's only 2 ticks. So remember, the equivalent on the E-mini S&P, quarter point increments, so 0.25, 0.50, 0.75. This is 0.6, rounding down would be half a point. So my expectation is that if there's any trade that you're going to take, whether it be right now or probably in the very near future, my expectation is only 2 ticks, and that's for scalping. Here on the 5-minute chart, 3 ticks. So it's relative. The issue is look at the current conditions. What can I expect? My targets and my stops are based off of that. If that's the only thing that you take away from this presentation, from this webinar, it will greatly improve anything that you do because you're not guessing. You're not guessing if I should take a 5-point stop in a 4-point target because the market may never get there. It's only trading at 1 point. Now, the other problem with stops are hard stops. Everybody says that the stops have to be with the risk to reward ratio a certain way. I don't believe in that. I believe in the opposite. I believe that you have to have multiple stops. First, when you enter, you have to have a stop to protect you because anything could happen. But as you move forward through the trade, you have to adjust and manage the trade with a variety of stops. Time is very important. Holding on to a trade for hours on end is never going to be to your benefit. Proof, if you have some type of evidence or proof, you should never go against it. If the proof says the trend has changed, or the proof says that the market's not going in your favor, all those things say that you should be now out of the trade. And in addition, if you're trading 5, 6 times a day or revenge trading, which is you have a loss, you try to recover, maybe break even. You have another trade, maybe it's a small win. Then you have another trade and it's a loss. There's something wrong. You have to stop at some point instead of just continuing and continuing and continuing. If the day is not right, and not every day is going to be tradable, then stop trading. So one of the positions is not just always being long or short, it's also being out of the market, knowing when to stop. Typically, when you look at, let's say, 3 losing trades in a row, there's no reason to continue. So if I look at the market and say, well, I tried it once, it failed. I tried it second time, it failed. I tried it a third time, it failed. Is there really a reason for me to continue? And I really have to say, for the moment, I should stop trading until it becomes clear what I'm going to do. Now, these methods can be combined. Primarily in the mentorship class, we have the ATO, the Atlas line, the roadmap, the blueprint, the X5. When I put them together, it helps me filter out trades. And really what I want to see is everything going long or everything going short. Whenever you have conflict, which means that something may be, for example, if I add here the Atlas line, and I add the at the open as well. So here is the ATO2, and here is the Atlas line. And I add these to the chart. If there's going to be a signal or a trade, they both should be long. I don't want to see one signal telling me long and one signal telling me short. I rather have everything going in the same direction. And if there's anything that's stopping me from taking the trade, then you stop, right? So when the Atlas line begins to plot in a few minutes, probably about 5 minutes or so, you're going to see a few signals. It could be long, it could be short, I don't know. So you see a signal. The next step is to say to yourself, what is the current conditions? What can I expect? You don't have to run into it or rush into it. The current conditions are already being displayed for you. So the current conditions at the moment are a point. So even before any of these signals present themselves, I already know what I should be expecting. It's not 5, 10 points. It's probably a point, a target, and a 2-point stop initially, and then you manage it with proof, with a time, maybe with a pivotal stop if there's pullback and strength trades. But I'm not going outside this boundary. I also think that being a little conservative goes a long way. And if you try to push it or be greedy, I think that sometimes it touches your target and you're not filled. So we want to be within reason, a target that resembles the current conditions. The same thing here with the scalper. The scalper is saying 2 ticks. So I want to be within reason, a 2-tick target on whatever trade comes my way. So even before a signal presents itself, we understand where we're at. Whenever the ATR is, let's say, 5 points, 4.5 points, on the 5-minute chart, that is, that's very volatile. We haven't seen that really in recent times quite that often. It happens when there's news, that's true. But whenever you have a volatile condition and we see it, the current conditions are too volatile to trade, it's too risky. So I say stay out. There's no reason to trade under those conditions. All right, so as soon as we see a signal, I'm going to bring up a dome. So if I look at this here, put this so everybody can see here. So I'm going to trade one contract. I'm not going to do any trailing stops. Trailing stops is something that I teach, and I do have some videos on trailing stops. Maybe we'll go over that in a little bit if you're not quite sure how to trail a stop, but I'm not doing that today. I'm just doing one contract. It's a simulated account, so we're looking at not real money. I'm just showing you the signals as they are, how you would do them. And the trades I'm going to take are going to be based off the signals, 3-tick target or a 2-tick target depending on the current conditions. So I'm going to start off here with a 3-tick target and adjust it. So if there's a trade here, it's a 3-tick target. If a trade here, it would be a 2-tick target. So these things can be adjusted for the ATM strategy. Now the NinjaTrader simulator here is, I think, one of the best because you can do market replay, you can test, you can go back in history, you can look at the orders. The ATM strategy that I'm using here gives me specific targets and stops as templates. Now all these things, if you're not aware or don't know how they work, I have videos on each of these short little clipped videos on daytradetowin.com or daytradetowin.org. Let me just put this out of the way here. And that way we could see if there's a signal on the scalping method. And by the way, if anyone has any questions here, Mike, you'll see the Atlas line shortly. And David says here, simulator part of DayTradeToWin. Yeah, if you need the simulator, David, you can download it from daytradetowin.com. We'll help you get set up with it. And that way you can, it's free, so it doesn't cost anything. It's a way to learn and practice without spending any money. And I think that's important. You don't want to throw yourself into the world of day trading without really understanding what the charts mean. Lately, I've received a lot of emails with traders that are using bar charts. I prefer candlesticks. Candlesticks, I think, provide a better understanding of price action. Now, if you look at these wicks here, sometimes markets have what's called, I call them yo-yo bars. And yo-yo bars are a great leading indicator. So if you think about when the market is trying to go lower in a trend, but yet has these wicks, and every time the market hits a certain area, for whatever the reason, it could be because of long-term support or resistance, but the direction of the wicks are very important. If you see wicks that are larger than normal, I would definitely suggest that you, let me just make sure I got everything here. I would definitely suggest that you stay in a mode that the market is coming into some type of support or resistance scenario. All right, so let me see here. All right, there we go. So this is a short signal. I heard a doorbell in my, there's an alert. So I was hearing the alert in the background. So short, 25.7150. So I'm going to place here a trade. I'm going to go a little bit in front of it.
Order filled.
Front running it. 25.7150 within a tick if you went in at market. I have here a 3-tick target. This is only indicating 0.73, which is 2 ticks, right? It's not exactly 0.75.
Target filled.
So when I look at the ATR, I want to look at, happened a little bit fast. I wanted to explain the trade to you. But when I look at the ATR, this here, 0.73, is not exactly 3 ticks. It's under. So you should be looking at only 2 ticks, a 2-tick target for this specific trade. I had it here for 3 ticks and I wanted to adjust it, but I'm trying to explain the reason for trade management and showing you trades and so on. Okay, so the ATO short is saying 25.7150. So I'm going short 25.7150, 25.7150 right here.
Order pending.
I'll place a limit order here as well. And now if you look at the ATR here, and this is also, let me put it out of the way. If you look at the ATR, it's now 1.25. So you can see the current conditions are not 3 ticks, a 1.25. I'm rounding down. It's not exactly 1.5. I'm rounding down. And so it's a 1.25 target, right? Just like this, if you look at this here at the time, it's at 0.73, rounding down to 2 ticks. All right. This is going to go a little bit quick. I'm going to try to answer all the questions as I show you and present to you the signals. So the ATO short is telling me 25.7150. The blue little indicator here is the Atlas line. Shortly, you're going to see a signal that's always also going to say short, Atlas line, and a number. So whatever trade happens first in a linear fashion, that's how it happens. Or that's how you should present yourself into the market, not wait for something or wait for another. It's whatever happens first, right? Now, the other thing is I look at filters. Filters are very important. Overbought, oversold, is anything conflicting? You don't want to go short if there's something conflicting and telling you instead go long. So it's important to learn the rules for each of the methods. I offer live training with each of the methods. The mentorship covers it all. It's one complete package. But if you're interested in purchasing separate methods, it's important that you go through the live training so I can explain to you the filters, how to manage the trade, everything really that's involved. It's not just following orders. So when you see this ATO short, this is the price to go short, but what's the current conditions? What's my stop? What's my target? What am I looking at as far as managing the trade? 4 bars or 20 minutes typically on the ATO, as well as the Atlas line for a time-based stop. The Atlas line is a little bit more because it has a pivotal stop as well as a prove-it stop. And the ATO only has the catastrophic stop as well as the time-based stop and the target. So each of the methods has its own rules for managing the trade, and they're pretty much all the same. I don't really have a list of 13 rules per trade. More importantly, is there anything conflicting? And if something is conflicting, I really have to say it's best to stay out and not jump into it because it could go either way. See some questions here. Leon says here, is trade scalping really worth it if you are only getting a couple of ticks if you have to pay $5 commission around turn? That's a good question. If you're paying $5, Leon, around turn, I think you may be paying a little bit too much for commission. Commission has really come down significantly, but still, you're still paying for commission, right? So whether you're paying $3 or $4, it's still commission. If you trade 100 times a day, Leon, I would say no. It would not be worth scalping and sitting at the computer day in and day out. On your lifestyle, it's going to hurt you. I don't like that either. But I do have to say, if you're scalping for, let's say, 5 times, 6, 7 times a day, when the market is more active, most active, which is this morning or mornings, then it's worth it. If you have 1 or 2 losses or I should say 2 or 3 losses in a row, definitely stop. It's not worth continuing. But for scalping, the more contracts that you put on, even with commission, and you trade a few times when it's optimal, meaning the ATR is high, you're fine. When you go into the afternoon, you go into the after hours or during the slow period, it's not worth it. The minimum is always 2 ticks. You're not trading for less than 2 tick target. Better would be 3 ticks or 4 ticks. And this right here will always tell you. So right here will always tell you if it's worth trading. As soon as this drops below half a point, any market, not just the E-mini, but 2 ticks on currencies or 2 ticks on the financials, stop. That's not worth trading, Leon. Okay. All right, so the Alice line short 25, 70, 50. So 25, 70, 50 is right here short. I'm going to take that first.
Order filled.
And so now I'm short ATR is 5 ticks. 1, 2, 3, 4, 5. So let me know if anyone has any questions. 2, 3, 4, 5, 6, 7, 8, 9, 10. I'll put this a little bit higher. And let me show you the chart trader. There you go. Just to make it a little bit easier. Like that. Everybody okay? Questions? Very simple. Managing the trade works like this on the Atlas line. 4 candles after I enter. So 4 candles would be, this would be where I entered, right? So this is the signal, Atlas line short. So this candle is 1. This next candle will be 2, 3, and 4. At the close of this 4th candle, it's a time-based stop. The time-based stop forces me out of the trade. You have to manually close out the position. The goal of the time-based stop is to say, I gave this an opportunity. I gave this a chance. I actually wanted this to work, but it didn't. Wherever you are, it could be a small loss, small win, break even, almost the winning trade, almost the stop. You close out the position and you're done with it. So the time-based stop, in my opinion, helps me get in and get out, not holding on to hope. This is going to continue, it's going to continue, it's going to continue, and nothing is going to come out of it. The longer you hold on to a trade, the worse off you are. All right? Is everybody okay? So 4 candles, I have my target. The target's based off the current conditions on the ATR. It doesn't have to be too complicated. It just has to have a set of rules that you can work with. Now, I also have to say some days are great. Some days everything works. You just can't make a mistake. Other days, everything goes wrong. So why are some days better than others? Or why are some days great, other days, it's just all losses? Well, I have to say that it has a lot to do with, first of all, the conditions the market happened to be in. If the market is in a tight range where all it's doing is chopping around like this, so it goes down and then it goes up, and then it goes down and then it goes up. This chop or channel type trading is very difficult to trade unless you're surfing the channel. It's called surfing the channel, support and resistance. I don't think, as soon as I realize that this is happening, the type of trading that I like to do is more breakout, and I like to do counter trend trades. If the market isn't moving, meaning it's stuck kind of like in a chop like this, if I realize that early on, you have to stop. It's not worth trying and trying and trying. So as soon as you have an indication that the market is just not working out, you have to stop. You can't revenge trade. You can't double up. It's just the day itself is not tradable. Also, when you have weekends or I should say a 3-day weekend, which is a holiday, or you have news events in the afternoon, like an FOMC, that is really a problem because an FOMC, an afternoon news event, what happens is a lot of traders wait. They don't want to place and hold on to a position. Whenever you have FOMC, it doesn't always mean that the market's not going to go anywhere. It's just people are on hold. They're waiting. I'm not going to jump in until it's clear what the news, which is coming in the afternoon, going to be delivered, is actually going to say. Therefore, when you have an FOMC, if the market is chopping around, and you can see it, I mean, it's not something difficult. You can see that hour after hour, the market goes down, market goes up. This is just traders going in for a little bit and getting out. Nobody is pushing it up or down because they're waiting for the news to be released. So just be careful. If you're aware that there's an FOMC, the economic calendar will help you see that. You see the market chopping around, a lot of dojis and a lot of candles with wicks. That to me indicates that I have to wait until it becomes clear. Now, the other thing that you may want to be looking at are trends and manipulation that occurs in the market. I'm sorry if I'm going a little bit fast. The trends that exist in the market are only 25% of the time. So if I know that a trend doesn't happen quite that often, I'm not going to place a trade and hold on to it and just put this here. I'm not going to place a trade and hold on to it thinking every single opportunity is a trending market. It's not. You're better off getting in, getting out, and being done than hoping that every trade is going to be a home run. 25% of the time we have a trend, about 75%, and this is most markets, 75% out of the year we have up and down, or what I call, I guess up and down, or back and forth support resistance, right? So when I look at the market as a whole, I don't really want to do the trending idea, just holding on to it and holding on to it. As a day trader, I want to be in and out by the end of the day. If I'm able to take a profit, whether it be a small profit or break even or a small loss, for me, that's a win. I don't want to every single trade wait and hold on to it and hold on to it and nothing comes out of it, or I give it all back. So don't think that trends are the norm. Whipsaw or back and forth support resistance is the norm. Markets are all manipulated. When I say manipulated, I don't mean there's somebody pulling the strings in New York or in Chicago. What I mean by manipulated is basically saying that whoever has the power to buy more or to sell more moves the market. It's as simple as that. I don't use volume. I don't use Fibonacci's. I don't use Gann or any of those things. But I do know that markets are manipulated because I see it day in and day out. I know some of you here may have the Trade Scalper, which includes the X5 method. The X5 method is a bonus. It's based off manipulation. And I want you to know that random moves and random markets, you can see up and down action randomly without knowing what to do next. But when you see a manipulated move happening over and over, at that point, I have to say there's something to this. So think about the manipulation that happens. As an example, manipulation, whenever you have a large position that has been accumulating over time and you're ready to take profit, how does that manipulation take place? Well, if the market is going, let's say, up and up and up and up, and they're buying 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 and they're buying, and all of a sudden it's time to take a profit, and we, the public, see an opportunity that says, okay, moving averages have crossed, MACD, momentum, everything is going up. Let me buy. At the point that you're going to buy, these traders who have been accumulating, whether it be over an hour, over a day, they are going to take profit. So your crossover MACD momentum combo is not going to help you if you have thousands of contracts now selling, taking a profit, getting out of their position. So you as the outsider will never stop them. Their positions are so large that they will run us over. If you know in advance where this happens, would you want to take a long position ahead or against them? I would definitely say no. Whenever I see, thank you, Nathan, appreciate that. Whenever I see the market being manipulated, as a filter, I stay out. Now, if it doesn't happen where I expect it to happen and the market continues higher, great. I can just continue doing what I'm doing, and I'm not really concerned if I lost out on a possible winning trade. I'm more concerned about the losers and the big losing trades that I could have avoided by knowing to stay out under the right conditions. So manipulation is very important. Before any trade, take a look to see if you're with the X5 or with the roadmap or any of the methods. Look at it to make sure that it's not manipulated. And so these are all things that you learn that I teach. And if this trade here hits 25.69, I would say that's a good winning trade for 1.25. And it's just knocking on the door here. Any questions for me, by the way? The X5 is a bonus method, Ron. It works on the E-mini S&P. And when I look at manipulation using the X5 method, it's just a small profit, I would say, under normal circumstances, 4 ticks. It uses a pivotal stop. We don't have an X5 here, but the X5 is a manipulated move. It happens all the time. There's rules associated with it. It's all in the course, in the bonus course. But it's manipulation. It's really what it comes down to. Markets being manipulated, if we know it's going to happen. I never like to catch a falling knife, but we wait, we see, we follow the rules, we take the trade, make sure the stop is reasonable. We're not risking, big money just trying to make 4 ticks. And it happens, I would say, at least once a day. I don't use any support and resistance levels, David, like high of days, low of days. No, I don't. Or prior support, where the market has hit prior support or resistance. I don't do that. Like looking at, let's say, for example, like this, right? No, I don't do that. Like looking at this or this, to guide me throughout the day, or this. No, I don't. I think that's important. I don't dismiss it, but it's not something that I teach. I also don't teach Japanese candlesticks. Japanese candlesticks, learning what this is a doji as you see it right now.
Target filled.
So there's the target. Okay, so let me just push this out of the way. And there was also a scalping short here, which obviously I was short already, so there's no reason for me to take this short. But this was another short signal on the Trade Scalper method here. All right, so we have Atlas line indicating short. We have the Atlas line also includes a separate signal. This is part of the software for the what you see here, ATOC, is the at the open chase the trade. So this is another opportunity to go short. The Atlas line is telling me short. The scalper is telling me short. So tell me, should I buy the market, guys? Give me a reason to buy. I don't have one. Guys and gals, I'm sorry. If I see the market turn around and give me a long trade above the Atlas line, that's a reason. If I see a pullback in strength trade as we continue lower and lower throughout the day, that's a reason for me to go short. Pullback in strength trades is if the market continues. So anything that you do, you have to have a reason. It's not, I'm just going against this market because I feel it's about to reverse or turn around. Absolutely not. I'm a strong believer that you have to follow some set of rules and have a purpose to doing what you're doing. And like I said, some days are fantastic. Some days are going to be hard. Mentorship class begins tomorrow, November 1st, and it includes all of the methods, not just the Atlas line and the ATO, but it includes all of the methods that I teach in one complete course. Okay, and so we have a 3-part payment plan as well. So it's 8 weeks with me, lifetime support and lifetime upgrades for free. I don't charge for upgrades. Yes, Diane, there's 2 separate mentorship programs. One is one-on-one, which is just you and me, and the other is a group class where it's similar. I share my screen, you hear me speaking. Everything is recorded for you. What better way to review everything that I teach by just going to a video, taking notes at your own pace and your own time from your iPad or your iPhone or from your computer at work or home. That way, really, it solidifies everything that you learn and that you don't have to take notes while I'm teaching the class. Everything is recorded for you and you can access that recording.